Hey, this is Steve Good on the Coin Chat, and today I am joined by David Atkinson, Commercial Director over at Holochain. And David, welcome back. It's really cool to have you here again.
Thanks, Steve. Great to be here.
I know today we're not really talking so much about Holochain, although of course a little update would be great. But we're going to talk about something more kind of unique and different, which is, I think, really cool, which is the ICO, STO space, what's happening in that space, doing some comparisons. And you've published a really cool article on Medium, which is what led to this next discussion. So I guess my question is, because you're in Holochain focusing on your own app, what got you interested in comparing ICOs and STOs in the first place?
Yeah, great question. Well, Holochain, we're so community driven. And we had a community driven fundraising process. We didn't take funds from institutions. We didn't have various rounds. We just had the crowd fund for the Holo hardware boxes and then the ICO. And cultivating, nurturing a really strong community is like at the core of how we're trying to work. So We actually called our ICO an initial community offering, not an initial coin offering.
Okay.
That was our term at the time. And over time, many people have come to me and asked for help with their token designs. And I love to help people. So in my spare time, I would just sit down and have a chat.
Yep.
And this is where two parallel streams are apparent at the same time. So the first is Holochain itself has no currency, because we believe at the protocol layer, you shouldn't put a currency. We have crypto accounting instead. Our currency sits at the application layer, which is Holo, the distributed hosting business, and Holo Fuel, the dynamic supply currency. We've got quite a different pattern or design for Holo Fuel currency than most of the tokens out.
For sure. Yeah, absolutely.
And so when I talk to people on what kind of currency you're trying to build, I speak to a lot of people who come from the business world and are trying to move into the blockchain or the crypto world. And I don't quite get this token thing. Like, I get blockchain, but I don't quite get this token thing. And so they start to talk to me about it. And really what we get to the heart is something feels wrong and they don't quite know what it is. But the reason this is important for Holochain is because in the crypto world, most people were using tokens to fundraise. So as we're thinking about growing the Holochain ecosystem, one of the major reasons for me from a Holochain perspective is to spend time with all of these different businesses, is to understand what are the fundraising mechanisms of the future going to be. So I think we're going to have some interesting conversations on STOs, IEOs, and other things.
Yeah, for sure. Because it's like the landscape is just changing far too quickly to keep up with. I mean, if you had asked me last year in May, I thought, oh yeah, IEO has got to be the future here because it makes sense. And then you discover that there's a number of exchanges that say they won't do IEOs, and you're asking, well, why not? And it's because of U.S. regulation, because it's seen as public fundraising. Okay, we just briefly paused because we had a fire alarm, but it was a false alarm, so that's cool. So so what I was saying was that I noticed the kind of trend that IEOs made sense, but then I noticed that, with the U.S. particular, fundraising is a regulated activity, and so there was a shying away from it. And I think there was a lot of uncertainty around whether IEOs would work or not. And then, of course, dare I say, they seem to be the only place they were happening was in Russia, which is not very regulated. And actually, they weren't really doing anything. And then all of a sudden, we noticed that Binance has jumped into it, and they've decided to launch Launchpad. And that's just spawned into a whole series of other things now with other IEO platforms on major exchanges. But again, all in Asia, which is rather fascinating. I know we're probably jumping ahead from your 10-point stuff that I really want to get into, but I can park that and just say there's definitely a whole theme of IEO stuff going on, which fascinates me, some of which I get involved with from the standpoint of advising clients. But I mean, it's really like this whole landscape is just shifting and evolving so quickly. It's just amazing.
Yep. Yeah. It's the mechanisms are, but the fundamental questions that you have to ask aren't. And the key for me is, for any business, making sure your fundamentals are matching the channel or the mechanism you're using to raise money.
Right.
And all I want to see is successful businesses.
Yeah.
And you generally have to get the combination right.
Yeah. So now you've got 10 points. I'm beginning to, I'm not sure if we'll make all 10 points in a single episode. If we get to the first 5, maybe we'll stop at 5 and then we'll pause it and do another 5 and make 2 episodes for everybody, because it's probably a lot of stuff that we're going to cover here and might be quite a long discussion. So let's start and see how we get on. But I mean, I'm really curious to hear what your 10 points are. So do you want to start with the first one about your comparison of ICO versus STO? And let's just go through them and have a hearty debate about what's going on in the space.
Yeah, perfect. Yeah, so as I said, there's kind of a general conversation that I have with people, which is, I really want my token to work. I'm like, okay, what does that mean? Well, I need to make my investors a lot of money. It needs to go up a lot.
Yeah.
It needs to go up a whole lot. And it needs to cost me nothing.
Yep.
So that's always a really good starting point. And then ideally the conversation is like, and also I'm really experienced. I've run great businesses before, and I really don't quite get how these things work, because nothing's ever been free before.
Right.
And yet this looks like it's free. It's kind of too good to be true, but I want to give it a go. And so the first part of my question is really like, okay, are you struggling with your token economics? And the framework for them being able to ask the question is really like, if you are, you're trying to build a currency. If you're not struggling, you're trying to issue digital equity.
Yep.
So a security token is easy to design from a currency perspective. What's hard is to get the regulation right, the legals, the nature of the asset, the technology, and all of those kind of things.
Correct.
But already, if you're not struggling with your token economics, you're not trying to build, you're really trying to build a security. That's one, and there's absolutely nothing wrong. Most businesses are perfectly suited and primarily suited to some kind of security coin as a mechanism to raise funds, because most businesses' design isn't to capture network effects.
No, it's funny you say this, because I've seen more projects that are determining their future business direction based on the price of the cryptocurrency market. And I'm saying to them, you are so confused about what you're doing if that's what you're thinking. Yep. And there's even a project here in Bristol, outside of London, of course, but that shut down. And their public reason for shutting it down was volatility of the coin, because ultimately money was coming in that they would have to then convert back to run their business in dollar or pound or whatever. And I read this and I said, this is absolutely 100% wrong what you've written here, but what a shame that that's the reason you've determined not to continue your project, because you've been looking at the market rather than focusing on your business. Because yes, you have a tokenomic model, and yes, you need your business to run with the token, but no, you should not be looking at the price of the token. Maybe you need to be worried about liquidity, but then again, you don't have to use the token utility for everything. If you're so dependent on dollars, you can also run your platform on dollars, but use a blockchain infrastructure to run your business, and you can separate them too, and the utility can come later. It's not a requirement to be now. But yeah, to your point, a lot of people get so caught up on the function of the coin and the value and the price going up, instead of worrying about the business itself. And that always gets me a bit frustrated, because there are ways to change the tokenomic models to make it work without people having to constantly look at the price.
Absolutely. As it's something that there's infinite detail really you can go into in this mechanism, but you're 100% right. And the best way to handle this is, again, in the first consideration set is if that's going to be a concern, then you design a security, or you design a coin that doesn't impact the fundamentals of your business. There are very few businesses that are network-based, community-driven, probably community-owned businesses, and they are the kind of businesses that benefit most from creating a cryptocurrency. The rest can be payment coins and all sorts of things. Brilliant and very useful. And any other business that struggles with that problem, the first thing is thinking about security. So yeah, the 10-step process is a way of drawing out businesses that have designed coins or community coins when they really should have just issued equity.
Yeah. So do you want to start with the first of your 10 points, and we just sort of go through them one by one? Because I'm really curious to hear what they are.
Sure. Well, the first thing
For
is
those
just
of you who are listening on Spotify or the podcast channels, of course, we're reading them out so you can hear them. But we will put a link to the Medium article down below in YouTube and also on a blog in our website for people to check it out.
So yeah, the first question, as I described, was: are you struggling with your token economics? Firstly, is this an issue for you pre-fundraising or post-fundraising?
Okay. Are you struggling with? Okay, right. So in that particular context, this is more about: do you have a tokenomics model that does anything, or if you don't, then maybe it's just a security because it's just a token for raising funds. Is that the point of the question?
The point of that question is to be able to find someone. It's actually an emotional question to start with, because you're trying to find like what concerns you about the business that you're running. And in general, the token economics causes a lot of stress for people.
It certainly does. Yeah.
Because they've designed something that they don't fully understand. They don't fully know the consideration set or the choices. And what happens is those choices are actually quite simple and fundamental. And yet what we get is brilliant mathematicians creating massive complexity on the base of a simple choice that makes it look like there are 50 token models or 100 token models, or a token is very complicated. But the implementation of a token can be very complicated. The nuances can be complicated, but the fundamental choices are simple, and people don't have access or a way of understanding those fundamental choices, so they get confused and it just feels wrong.
Right.
And I think the first step of change is always that acknowledgement that something isn't working. So my first question is always, well, it's actually generally a listening, and this is the question in my head. And eventually I just say, so it seems like you're really struggling with your tokenomics.
Yeah. So just read the question again, so for those listening can hear again what the question was.
The question is, are you struggling with your token economics?
Okay.
And so in my head, what happens is, if the answer is no, either they've got a brilliantly designed coin,
yep,
or they have designed a security,
right,
realizing it or not, and right.
Or they've not struggled because they've made the mistake of issuing dividends on the coin, or issuing some form of payouts or guaranteed payouts on the coin. And by the way, people, if they're doing that, it's a security. Or it's certainly most likely to be, because giving out dividends is certainly falling into the lines of being tied to an asset of the company. Of course, we could get into the whole Howey testing in more detail, but I know that it's a big factor that if you're going to start paying people based on the value of the actual company and the underlying value of the way the company runs, then you have to consider that dividends, payouts, guaranteed payouts, by the way, stay away, because nobody can guarantee anything in this life. So separate, I've gone off topic a little here, but yeah, so that's a really good point though about the tokenomics for businesses and how they're setting up.
Exactly. I love the point. And the reason it's such a crucial question, especially like coming from Holochain, distributed application framework with no currency, but say Holochain in this sense could be similar to an Ethereum and other like protocol-based platforms. Any platform wants to see an ecosystem built on top of it. And so but a platform that wants an ecosystem in general wants people to use the currency on that platform. And that makes a lot of sense, because you don't need, if you have 1,000 applications running on your platform, you don't need 1,000 different currencies.
No.
So trying to get a clarity around what constitutes good token design connected to how do crypto projects that don't fundraise through tokens fundraise is so important for building a vibrant ecosystem.
Right. Yeah, absolutely. It's very cool. Okay, so let's jump to the second one.
Okay, so then the second question, really starting to get sense. Okay, struggling with your token economics. What's really going on with your economy? What kind of economy are you trying to build? And the person says, oh, economy, I just want to raise money. Right. Isn't a token economics a way to raise money? No. Unfortunately, the thing that you birthed into existence when you were thinking that fundraising actually is then the currency that powers your economy as you're building your product or your service or your platform.
Right.
So you really need to be starting to think about your economy now. Now, you're not going to know how everything's going to work, but it's a pretty good start to say, okay, who are the users in my economy?
Yep.
And that becomes the second question. So what I really get people starting to think about here is who is doing what and who is using what and who is using money in your economy. Who's buying, who's holding, why are they buying, why are they holding, becomes very, very, very important. So when you get to, are you users your community? Have you asked for money fundraising through your ICO, IEO, STO from people who will be using your product or your service, or have you asked from the investment community?
Yeah.
If you've asked from the investment community, you would have built a security token or you're building a coin.
Yeah.
Whereas if you're asking for money from your community, what you're saying is you want to use what I'm building and you're prepared to take the risk, a bit more like a Kickstarter. You're prepared to take the risk to purchase now with probably some kind of benefit because you're purchasing most likely at a discounted cost. You're purchasing early because you have the thing that you want doesn't exist yet and you want that to exist. And that's a perfect application for blockchain businesses, because blockchain should be enabling new businesses and new business models. Things that couldn't be done before can now exist as we get this interconnected world. And so there will be community opportunities where you will bring into existence these businesses by pre-purchasing. Pre-purchasing currency in those businesses.
Yeah. Yeah, I mean, so one thing that strikes me is when you talk about the different types of users, I mean, certainly when you're talking about a coin, unlike a business, I mean, with a business, you just sell equity and everyone else is participating in the business without anything at all. But in the context of the coin, you've got investors who buy the coin. You've got users who use the coin, or consumers. You've got advertising that can be run on the platform that could be paid for in coins. You've got partners who could be upstream and downstream partners that are paying you or being paid in the coin. And it's a totally different way of thinking that disrupts the whole mindset around whether or not we're setting up the tokenomic model properly. And a lot of people, as you say, they may get some of it right and they may miss a lot of it because they've only been thinking about the fundraising, not the running of the business. But then again, there are some projects out there that I've seen that are, I mean, they're brilliant. Some of these token models are insanely cool because they have thought about all of that and they're actually focusing on run the business. But there's more that haven't thought about that, and they just thought about raise money and then, and it's just used in a very simple way. But I think there's so many use cases that every business runs that, you need to think about all those different use cases as they are, but not anything to do with anything other than how does the actual infrastructure work? That's nothing to do with fundraising. It's just how does the actual whole infrastructure work as a process? And a lot of people just don't think that way.
Exactly. And I mean, we know blockchain businesses as we're conceiving of them, and especially like what came from Bitcoin and what come from Ethereum.
Yeah.
There's a wave of distributed, community-controlled, community-owned, decentralized decision-making. This theme is coming through, and ideally we will have scale community businesses. I mean, that's the vision for the next Facebook and the next LinkedIn. Will be that they will be community-owned. Maybe it's 5 years away, maybe it's 10 years away. Technology, social factors, but it's coming somewhere. So there's these wave of businesses, and they have a particular design.
So you said, wait, so just go roll back for a second, because that was rather interesting. Community controlled. So let's talk about, what do we mean by that? So Facebook's a publicly traded company. All the shares are in equity. It's controlled by the majority of people who have lots of money. And the rest of us, well, we get a few shares and we get to make a bit of money by the shares going up and down. How does it shift from that sort of money controlled mechanism into a community or consensus driven mechanism? If we use Facebook as an example.
Yeah, perfect.
Put you on the spot.
No, it's absolutely fine. So thank you. Great question. there's a couple of aspects of it. I'm going to steer away from the governance and decision-making aspect for now, because in my mind, governance becomes an unhelpful catch-all for all sorts of decisions that need to be
Yeah,
made.
it goes too far. We don't know where the boundaries are on that yet, for sure. Yeah.
Exactly. So let's say that proper peer-to-peer computing with money layered on top of it allows us to do edge economics in a way that we've never been able to before.
Sure.
So technology allowed us to scale and create network effects to connect users everywhere, billions of users everywhere, and we get a Facebook. But our economic system wasn't growing at the same speed. And so technology, network effects, aggregates, economic system, only way of doing it is centralizing. And so you get people creating for free, effectively, and then value is centralized, and then investors can receive benefit from that, because that's a model that we've known for a century or more. Where I see community-controlled distributed networks going is that the network supports transactions between peers.
Mm-hmm.
So the Facebook model will be that content is commercialized at the edge where it's created between the creator and the ecosystem around the creator. But there's no need for the value to be centralized and sold, because the creator can build, really, there are small micro economies networked globally around them.
So there's one interesting twist with that for me, which is that if I'm an advertiser, let's say I'm a company and I want to advertise a product, my core strength is the product. My core strength is not to figure out all the different groups where I need to run my advertising, or to figure out how to get it out there into the right communities at the right time and right place, which is where a lot of these broker-related advertising services have spawned, is by me outsourcing the stuff that I'm not awesome at, and I just spend my time and effort doing what I'm awesome at, which is I'm building Nike shoes. I mean, Nike, okay, probably a bad example because they've built an incredible marketing engine, but a lot of smaller and mid-sized companies, they won't have that kind of engine to target in such a way. So what you're describing in part is getting rid of middlemen and brokers, which makes sense. But I can also see a downside in that, which is, hey, I'm a small mid-sized company. I don't know anything about how to target this advertising, get it to the right communities. How do I find all those groups? And now everyone's hunting for the same stuff that a natural broker or middleman knows, because that's their job. So
interesting. That's so. In this
and
level,
I'm killing my own argument because I'm always arguing against the brokers and the middleman. I just found a reason why it actually makes sense, but it's just so annoying.
No, I don't see. I don't agree. It's really interesting. I don't see blockchain as removing middlemen in the way we think it will eliminate everybody in between. Because middlemen generally exist as much for technical reasons, for structural reasons, as for social reasons.
Sure.
And so the world I was describing there is what is very different. Specifically, I was talking about the economic system hadn't caught up with the technical system. So it's very hard to do, for example, edge payment processing, or edge analytics that aggregates all these local communities and provides a centralized interface for you to be able to purchase your ads from. So was the centralizing architecture was really existed because you couldn't do these things with local choices. The world I'm imagining when we're thinking about the evolution of a community-controlled Facebook is there's a layer of technology that allows for all of this activity to happen, because the network effect wants to be, people need to be communicating in a way that is connected. So you want to be on the same protocol or on the same network, but the economics can vary because we have different blockchain ideas, so many pluggable protocols that we can put in that can communicate with each other.
Sure.
So you can very easily, in a distributed way in 5 years, still have a platform that an advertiser with a product puts into their product that could connect into millions of different marketplaces.
Yeah.
You don't have to have the centralizing body to connect those. That can be distributed, if you know what I mean. So it's the creation happens at one layer, And then the aggregation and analytics can happen in another layer, and both can be distributed and both can be connected. And
Fair
so
enough.
you don't
Yeah,
need
I
the
get the
middle
point.
layer.
Yeah. Yeah, I was just throwing out some different ideas or thinking on this just to try to, well, ratify my own thinking and also just to kind of challenge your own. So let's jump. Go ahead. You want to jump to the third one? It was a third one now we're on, right?
Yeah, we're about to. Yeah, exactly. So we're the second one we just to remind people is, are your users your community?
Right.
This is such an important point to really, because if you're not building a community driven business, that's okay. You've got customers maybe, but no community, then it's a different currency design because you're expecting to have different actors in your ecosystem. So it's really important to tease.
Yeah, in fact, I'll put a link up above on on this episode about the community stuff, because we have talked extensively about how to build communities and the challenges of it and why we should do it. And so many people today even still don't understand that. They just say, I am running my project and that's it. And you say, yeah, but if you compare projects like Holochain or Komodo or Neo that really have, I mean, I use Holochain as an example because you're here, but it's true. You guys have communities, you have engagement, you have users that are involved. Sometimes they want to help out with development. Sometimes they're just commenting and things socially, but they're involved and they're active and they're becoming loyal to the brand. But many other projects just build the thing and everyone says, when's the MVP coming out? When's the product coming out? And that's not community. That's just, that's just short-term thinking on the behalf of the company. That's not building in that community with the users. So totally agree with you. Community building is completely transforming the way businesses operate and work, because the big companies that have big marketing engines like the Apples or the Nikes or the Facebooks, they didn't need to build communities that rallied around their brand. They just built products for people, and we liked the products, and that's great, and that created loyalty too. But this mega shift that we're seeing in society, I think, is also about communities or loyalty around the brand of the company, where you're actually connecting to the company on its values, but also because you can engage and talk to people and contribute. Whereas, how many people do you know that can contribute to Apple's future direction? And the answer is probably nobody. And, do you have a Telegram channel for Apple? No. Do you have a Twitter account where you can actually engage with them? Probably not. Do the leaders of, the only example I could think of would actually be Tesla, right? So that's where Elon Musk is different from everyone else, because he's on Twitter having conversations with people. He gets it. He's really involved and engaged, and people are always excited when he responds to their comments, but he responds to tons of people. But he's probably one of the few, industry leaders who's actually realized he needs to get out there and start talking to people to build communities and get people to rally around him. Whereas, I'd love to see Tim Cook get out there and start doing the same thing. I would love that.
I completely agree. And I think the final distinction in this one that hopefully will help the audience is there are really blockchain enables a couple of new types of community. So for example, with Holochain, the way we see community is we want everybody who's part of Holochain to host distributed applications. So our community are our hosts. So we're trying to build a business for the community so we can all host the distributed internet. That's one layer of community. And that there are other businesses like that. When you think of IoT businesses, the agent, you're interconnecting a whole bunch of devices. In fact, your agents or your devices are your community. When you have like Binance, where it's amazing community building like you just described, and by holding the coin or transacting in the coin, you receive value. But your community is not, the value is a secondary value. So you're not building a distributed network of Binanceans.
Right.
You're enabling Binanceans to profit from or benefit from holding the token by participating in a centralized thing like an exchange by moving my money. There's these two layers of community. And again, it takes often people a little while to really get this, but they are two different currency designs.
Yep.
So you have, overall, you need this massive community building like you've just described. But if your community is effectively your business or your network, it's one pattern. And if your community benefits from your currency, but is a centralizing service or product that they're receiving, it's a different pattern.
So
It's very important
here's
to
an
teach
interesting twist I'm going to throw at you. I think you'll appreciate this. If we look at the history of how we valued companies, in the past, we only had one metric, which was revenue.
Yep.
Making money or they're not making money.
Yep.
And then comes along Twitter and Facebook, and they said, well, we don't make any money. And everyone said, well, then why do we value you? And they said, because we have 1 million, 2 million, 3 million, 100 million, 500 million users on our platform. And everyone said, so you could run a little advertising on there and you could monetize that. Yeah. And I think that was a really, really interesting paradigm shift when we went from revenue to having a lot of users equals a lot of value, because WhatsApp got acquired for a lot of money. And lots of other platforms out there that, because they have tons and tons of users, they have value to everyone else because you have a reach. What's really interesting for me with blockchain is this new thing we talk about, and you and I are talking about it now, called community. And I have seen multiple cases where investors would say, I'm not investing in this project because the community is not big enough. And you'd say, well, hang on, what? Because we're not talking about revenue, and we're not talking about users, because the users can't be there yet because the product is still being built. So now they're measuring companies on an entirely different metric, which hasn't even reached the public consciousness yet. And here we are calling it out right here, which is the ability to measure companies by the community size, which would be by looking at the engagement and the number of users and the types of comments that are positive or negative sentiment on your Twitters, on your Telegrams, on your LinkedIn, on your Facebook groups. And that is an entirely different way to measure the value of a company or by the community itself, and how many people are backing and involved and supporting and commenting and discussing on that project on a regular basis, which will then lead to users and lead to revenue. But we've gone one stream further down in terms of really getting the reach to the individuals, and we're valuing companies today based on that community reach. What do you think about that?
To me, it ties perfectly into the third question.
Right, the third question, we are going to have to make this a two-parter because
we are.
Yeah, cool. Let's go for it. What's number 3?
The third question is, does your business reward your users for efficient and value-added work? And then
say it one more time. Does your business reward the users for
efficient and value-added work?
Efficient and value. Okay.
Yeah. And so let me just.
That's really interesting, because how do we measure reward? Because we can also reward people for participation who aren't employees, for example.
Absolutely. So there's a few different ways, as you just described, of looking at this, but connecting that to the inquiry you were following before.
Yeah.
Which was, how do you value? What are the new ways we're using to value organizations? And this way of community is, we're seeing the value, but we don't know quite how to measure it. If you combine those 2 points with what I was saying earlier, which is there's actually a couple of different ways of looking at community, and the world hasn't yet made that distinction. Because blockchain, we know, but we haven't experienced it yet, allows the network to be the business. And Netflix will be a perfect example.
Yeah,
so it will be Netflix, or it will be the evolution of the Netflix, but eventually there will be Netflix users will be also Netflix hosts. I will be running the Netflix application. I will be storing content on the edge. They're already using distributed systems, distributed databases, so that they're not having all of the content centrally held. Right? But what they haven't moved into is the evolution of trust. So at the moment, the application, the running of the application and the storage of the data is being held with data centers. Eventually, whether it's Netflix or someone else, it'll make sense that that data is held on the edge at the point of consumption or the point of creation. And that, in those businesses, as they evolve, there will be decentralized organizations, decentralized systems using distributed architecture, expanding what we have as a trusted actor in our current world as a company, that you will be expanding your level of trust to incorporate your community. Then community metrics are your business.
Yeah, so interestingly enough, when you talk about distributed content and you talk about it being at source or destination, I think there's another piece in the middle there, which is many people talk about what's the point of a masternode. And it's true, most people don't have any purpose.
Yep.
But what if we started using the masternodes that or the proof of stake nodes that are distributed around a project, and that project could then use those nodes for distributing a content in a decentralized way. So I could put my content out. It could be, pushed to one or several nodes, much the way that Holochain doesn't distribute everything everywhere. You distribute it through an agent-based mechanism. You could follow the Holochain model of an agent-based structure, but using nodes to distribute content, and it would be done in an anonymous way. So I'm at source creating the content, but I publish it, but I'm not publishing it from my home PC because I don't have the bandwidth to support that. But if I use the distribution of nodes, I could get that content all over the place. And then whether I'm a YouTube or a Netflix pulling the content in for distribution, again, that could be distributed as well or decentralized. And then you're talking about something that's a really interesting mesh of content to distribution. I think that's probably where we're heading when we start to see the nodes are actually being used for more than just staking coins and making money.
Exactly. And Holochain would use a distributed hash table. So it would be like a collection in the DHT rather than a master node or something, but you can also do a master node.
Principles are the same though about a distributed or decentralized environment.
100%. And this is where, this is exactly what this question is designed to ask. So in your design of your economy, have you thought about where value creation happens, and have you got an efficient design for value creation where valuable activity is being rewarded? So maybe if you don't need a master node, then you shouldn't design in master nodes and have them receive benefits for operating their master node because you don't need it. If you need a master node, they should be rewarded appropriately. And this question is designed to really tease out whether it's mining or staking. One of my biggest concerns with traditional blockchains that were designed many years ago is that they reward like competitive behavior that isn't efficient and value added for the network. So the fact that there's a whole bunch of miners that lose is a massive inefficiency. And when you take that, that's fine for a currency like Bitcoin. But when you try and take that to the application level, you're pushing that cost onto the users, customers of the application, and that means there's going to be someone is going to come along with better technology without those costs and attract the user base. So your currency really needs to be designed for and this is where it cuts into protocol choice. You have to be designed for maximum efficiency, otherwise you're just not competitive. And so this question tells you exactly what you just described. If we need master nodes, we need master nodes. This is where they sit. This is how they need to be rewarded.
Yeah, but my point was I don't think people have even thought about the usage of what masternodes are for. I mean, there's tons of masternode projects out there, but people haven't actually thought about the use cases other than staking your own nodes for your own purpose. But actually, honestly, these companies are missing a trick. I mean, and anybody who's thinking about running a project that's decentralized, that wants to run decentralized services, get on the masternode bandwagon and understand that node can be designed to do stuff. It could be a decentralized service that's being run where some of the computing power can be light, doesn't have to be heavy, but streaming files doesn't take a lot of compute power, just takes some bandwidth. But other things don't require much of anything other than a couple of pings of messages back and forth. But people aren't taking advantage of the fact that we've created a distributed or a decentralized network or mesh of computers and aren't even leveraging that yet. And I'm thinking, what are people missing here? Why is that not the case that's actually being leveraged and used? And I think people were very quick to build stuff, not thinking forward about what it's actually going to be used for. I'm beginning to think that there's a lot more use cases out there that people just haven't considered. I'm beginning to hear some of it now, which is great. But oh my God, I think we have another 18 months of really interesting evolution now in this space. For sure. It's going to be really interesting to see what comes out next.
Spot on. And the masternodes are a nice simple example, isn't it? And they're two different projects. One has a masternode design that adds value to the network and is rewarded appropriately. Brilliant. One that doesn't and has masternodes for no real reason. They become a centralizing power on the network with no value add. That network is going to have a limited lifespan.
That's right. For sure. Okay, so moving to number 4. More
yeah, the key as you get from number 3 for me is all about business risk there and efficient architecture design. So number 4 can be, can you describe the value of your business through your currency design?
Okay.
So is your currency related to the fundamentals of your business or not? Very, very, very simple. It could be an STO, to some extent, is in one way ultimately the only fundamental of your business, because it could be related to the value or market value based on equity. Another way of looking at that is, have you designed a coin that is tied to any metrics or fundamentals of how you operate and run, or not? And we can get really interesting. So again, I love like payment coins, like Binance Coin are really interesting because in some ways they are really tied to the fundamentals, because if it's a transaction fee business and you've fixed the supply,
yeah,
then
well, actually, not even a fixed supply. They're actually burning the supply over time to create, scarcity.
Exactly. So that's a very effective design in today's market. The reason that's super effective is that the spending of the coin on the platform is not a high risk activity. So if I'm a user and I've purchased Binance Coin for the purpose of for saving on the transaction fees, if the coin doubles or halves, I'm generally okay, because the average trade I think is 0.01 BTC. We're not getting many people trading more than 20 BTC in any transaction. It's a tiny handful. So the time your transaction fee becomes material as a trader, where you really would care about the price fluctuation of the Binance coin, you've got a different mechanism to be able to handle that. So you've taken that risk out. So where this fixed supply model works absolutely brilliantly is where the user is pretty price insensitive to price fluctuations or to volatility. And that is a brilliant design, but it is completely contextual. And it is one way of describing. So it does describe the value, because it's a transaction-led business, and the coin is related to transactions.
That's right. Oh, amongst other things, it's being used for a lot of other things now too.
Exactly. Well, that's when you get the network effects and using things for different purposes. And
now they're using it as a fundraising token. So you have to buy the token to then buy the IEO-based token. They're also using the token to, which I think is really brilliant. I mean, they have this thing called sweeping up the dust. So if you've got a whole bunch of coins that have got a little bit of dust and they're 0.01 or they're worth a penny or whatever, you can't trade them. But what Binance will do is sweep them all out of your wallet and give you Binance coins in exchange for it. And if they do that to 10,000 people, they've now got all those coins tradable again in their wallet, and their treasury departments, and they're laughing going, great, well, we didn't have anything, and now we've got 10 BTC and sweeping up all the dust from the people who didn't want all these other coins and swapping it to Bitcoin. And they've just monetized their business in an entirely different way. And at the same time, hang on one second. Okay, sorry, we're back. I had a small interruption from my Dalmatian in heat. So I apologize, but my male Labrador decided he wanted to, well, you get the point. Sorry. So I had to pause this for a second there. But so what I think is really interesting about what Binance is doing is the fact that they're creating other mechanisms in which they can use their own coin. They'll reward you with some coins for taking away a little bit of dust, but in the background, they get everyone's dust. And if you just do a multiplier effect of how many people they sweep in, and then they can take, little bits of Dash and more Dash and more Dash, and all of a sudden they have a whole Dash coin. They go, oh, okay, let's swap that now to a Bitcoin. And that's a great way to monetize a business using that. And then that coin that they just gave you, which is a BNB coin, can be used for trading. So your trading fees are now free. So you use your dust to create free trading, and actually they don't care, because every time you trade, you're creating more dust when you buy in and out again, and then they sweep up your dust again, and then they give you some more free trading coins because they're getting more out of the dust than they are out of their actual trading. They don't even care. I think they're almost ready to give away trading for free by doing this. It's brilliant. It's absolutely brilliant.
Exactly. So it's an example of, once you get network effects with your currency, then you can change from specific use or platform use to general use.
Yeah, you see that happening with BNB for sure.
Exactly. And what you also see with BNB, as I said, is like it is related to the fundamentals. It's a transaction business. It's using transaction currency, fixing supply because users are not price sensitive to fluctuations of the currency in their activities on the platform. And you cannot take that context and apply it to shoes. Because if I have my shoes currency and my price drops by a quarter, in Binance, that means my trade, instead of costing me, $1, might cost me $2.
Right.
I'm okay. Because I still made or lost money on my trade. The trade itself was the primary emotional concern, not the fees. With the shoes, when my shoes currency goes by a quarter, I need to go back to the market and now I pay 4 times for my shoes what I would have paid when I first purchased that coin.
Right.
Economies work in that way with a product or service that we can relate to a non-crypto or real world value. And a perfect example of those is the investment world, where people are talking about distributed investment vehicles, blockchain-based investment platforms. Great. I want to put $250,000 into a privately held company. So I purchase your coin. Your coin halves in the time between purchasing the coin and wanting to invest in the company. My goodness, now I'm only putting $125,000 into the investment. That business is going to last a total of 2 seconds.
Yeah.
And so this is this tension where that outside those transaction fee businesses, high volume transaction, when you get low volume, high value businesses, you need a different pattern of design.
For sure. Yeah.
You can't accept volatility. So what I like to ask here in this question is well, what is the value you're creating as a business, and how is that reflected accurately in the currency, so we can set up the right design pattern so that you don't unwillingly create a design that causes your users to evacuate from day one.
Right. Yeah, that's really interesting. Wow, really cool. Okay, so we'll move to the last one, number 5, and then we'll come back for a second episode to do the second half, because there's so much content in here. This is just great.
Yeah, so the final question in this set is, does your business work better if your supply of currency is fixed or preset, or if it varies with demand? And so this, again, is a general economic question. And the simplest way to describe this to people is, if you have an Uber and what you said with Uber was that we were always going to fix the supply of drivers, then how do we think that the customer is going to respond? Because that is effectively the taxi world before Uber came in.
Right.
And that is the design pattern that Bitcoin, Ethereum, and Binance and other coins, almost everybody, in fact, I think every single token apart from Hollow Fuel, when it comes on in the top 100, has a form of fixed with some kind of instrument to change supply.
Right.
That is absolutely fine for the Binance example that we talked about before, or for Bitcoin. But where it doesn't work is productive economies, because as I just showed, the productive economy where you fix supply, like taxis, is being disintermediated by an Uber. And if you need a currency to match a productive economy, what you're trying to do is use supply to vary to meet demand instead of using price.
So can you give any examples of projects where we see, because I mean, most of the projects I've come across, they fix the supply and they don't mint more coins, but they tend to burn them over time. So if we're talking about variable supply rather than fixed supply, and variable implies minting and burning as necessary, are there projects that are doing both?
Hollow Fuel is the only one.
Okay.
So it's basically taking a pattern of mutual credit, which is effectively like double entry accounting.
Yeah, because I would have,
and it's combining that approach with the idea of backing it by an asset. In this case, it's distributed hosting, and that asset therefore has a value because it's taking traditional hosting and moving it into a distributed form. So you're using the idea of demand, distributed hosting, supply, your network of hosts, and price, how much the application is willing to pay for distributed hosting as the mechanism for the economy. But you're saying as demand increases, what we want is more hosts. And so therefore we want
I
to create
see.
more
Right, I
supply.
understand. Right, I get it. And as if the number of hosts were to decrease, then you'd need less coins to go with it. And as the network effect is growing and expanding, then so it's basically meeting market demand and matching it
Exactly.
so that you don't end up with over and under supply, but actually you have a matching supply by way of the way the system bonds.
Exactly. And so there are many approaches. And I'm not
What's
advocating.
interesting about that is it's somewhat theoretical in nature talking about it, and it's something probably harder to grasp because people don't think that way. So you're starting to think like, how does it know when to expand or to contract? Because
That's
very, very hard to get your head around that one.
But this is the beauty of the distributed world that we're talking about, because when you have edge intelligence and you have ways of listening to edge intelligence, you can design systems that expand or contract based on economic activity. You can never centralize that and know, but you can know in a distributed world. And it works with intangible assets, and ideally it's going to work with physical assets, so that Nike was a great example. I mean, eventually we'll get to a model and you'll have some kind of distributed shoe company, and as demand changes, we'll be way more sensitive with demand to supply as the way.
Oh, interesting. Wow.
So, exactly. So what you're getting to is a new pattern here of currency design, which is asset-backed distributed currencies where supply is the thing that fluctuates to meet demand. And what you'll get is, and the way Holofuel is designed is that we did initial benchmarking and that set a baseline price, right? Because it effectively said the cost of distributed computing is X. Then what we think will happen is the cost of distributed computing will go to Y, which is dramatically less, because the idea of a network-based distributed business is that you commoditize prices, you make things cheaper, more efficient, more available, more local, more scalable. And so the token holders will have, from early on, will have a price increase. So you'll get value from being an early participant in the network. But over time, because price isn't the matchmaker here, supply will change, demand will change, and price will be fairly constant, which is exactly what we want for these productive economies.
For sure. Wow. Really cool. I mean, I'm not even sure how to summarize these 5 questions into like kind of a, what have we just covered? Because we've talked so much about building economy, about the tokenomic model, and that why are you designing the model in the first place? Is it for the purposes of an investor or for the purposes of your community? What do communities look like? How do you build more effective communities? How do you engage people? I mean, does that summarize more or less what we've talked about?
Absolutely. I mean, we're building a new world, so we need to cover everything. What we're looking for is businesses and people that are really well informed and making the best choice for the business or the economy that they want to build. And I just want to make sure people have all the information at their fingertips to make those choices, rather than feeling in the dark and not being able to follow the threads through effectively. And making because the incorrect design can and will kill great businesses.
And the reality is a lot of projects are built on certain designs that don't work anyway, and they're having to rethink it and redo it. I mean, coin being there is one thing. The mechanisms around how it operates can be changed over time, which is great, unless you've built a very complex blockchain infrastructure and now you're having to fork your own infrastructure to make it continue working, which I haven't heard of happening really. But I mean, we're in very, very interesting territory with all these new developments. So this was great. Thank you for writing that article and inspiring us to get back on here and talk through this stuff, because this is stuff that Yuri and I talk about all the time, and we're recording at a time when Yuri's still sleeping. So we'll give a little shout out to Yuri, because he's probably just about waking up now and thinking, what are these guys up to? And so
maybe we'll do 6 to 10 with him so you can jump in and
let's see. I mean, we could do that for sure. That'd be interesting too. So anyway, thank you very much, David Atkinson from Holochain. We will certainly put the links down below for the article you wrote on your 10 points, so people can check out the article, and we will come back and cover 6 through 10 and dig in deeper. Thanks everybody for listening in from all of our podcast channels and for watching us here on YouTube. Give us a subscribe, because David Atkinson is a super cool guy and we want to hear more from him. To the moon. Until next time.